Hey there, it's Orphe Divounguy, the co-host of the Everyday Economics podcast. Exciting news! Check out my new weekly column at thecentersquare.com. Join me as I break down complex economic trends in a way that's easy to understand for everyone. Check out the column every week and stay informed about the economic forces shaping our world. Be sure to subscribe to the Everyday Economics podcast and visit thecentersquare.com today.
Welcome back to Everyday Economics, the podcast that helps you learn about the economic world happening around you every day. I'm your host, Krug, CEO of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics, a production of America's Talking Network. You can subscribe to all of our podcasts at americastalking.com. To support Everyday Economics, please make a tax-deductible charitable contribution by clicking the link in the show description. We are recording this episode on Monday, June 24th. And joining me, as always, my friend and colleague, Dr. Orphe Divounguy, PhD economist. Dr. O, over the weekend, I sent you a story that I had read at CNBC, a story published on Friday, the headline of which was, "The stock market is in its longest stretch without a 2% sell-off since the financial crisis." It's kind of fascinating. I mean, the S&P, according to CNBC, has gone 377 days without a 2.05% sell-off. And just reading through their key points, that is the longest stretch for the benchmark since the great financial crisis, according to FactSet, and that's data that CNBC compiled. This market lull comes as investors pile into mega-cap tech stocks such as NVIDIA amid bets that artificial intelligence will boost profits. People are bailing out of NVIDIA today. NVIDIA is getting absolutely smashed. It is down, the last time I looked, about 6.5% today. That's not great news for NVIDIA investors. It's probably pretty great news for people who want to jump into NVIDIA, who have been perhaps dissuaded from doing so because the stock has just been on a roll since it split, and actually prior to that. So let me ask you this. Does this matter? I mean, these kinds of points in time that are measured like this, is there any reason to fear? Of course, this headline somewhat portends the notion that the stock market's too hot and it's been rolling along too well for too long and something bad about to go happen. Tell me what you think.
Yeah, I don't know.
And that's why Dr. Orphe Divounguy is the best in the business.
I have no idea. But exactly. I mean, look, thanks. I appreciate your vote of confidence here. Yeah, sometimes it's important to say, I don't know. Here's what I think. I think AI is just, I use it every day. Let's just put it this way. I think it's definitely going to change the world. It's already changing the world. And so is the stock in a bubble or justified by growth? I think this thing is going to continue to grow, man. It's just going to continue to grow. Now, whether or not it will grow into its current valuation, I don't really know. But it will grow. And that I promise you. I see it. I know a lot of people who work on stuff, whether it's at Microsoft, Amazon, Google, Apple, all these places. And I promise you, this thing has a lot of potential. And so I don't know what the stock is doing today. I don't know why it's doing what it's doing.
It's only down 4.9% right now. So in the few seconds that we had a chance to talk, I think people wised up on NVIDIA specifically.
Yeah, I don't know what's causing it. I don't know if there's some news that came out that I am not aware of.
No, I think that this has happened. I mean, when Microsoft became, by market cap, the largest stock, then it fell. And when Apple became the largest by cap, it fell. I think that it's just NVIDIA's turn. There's always a lot of hate on number one for some period of time, that there's blowback in the market. I think that's what we're seeing today.
Well, I don't know. I don't know, man. I don't know if you would call it hate or unless there's some sort of regulation or something that comes out, it could just be people taking their, profits, it could just be some profit taking.
It's headlines today. That's it. Everybody and their brother is writing about it. The Wall Street Journal had a story that came out just a few moments ago that says that the AI chip makers' shares are close to correction territory. But that now it's gone back in the other direction. So, the reporting in real time, it's tough business, challenging for everybody. And certainly intraday trading I mean, I think it's, by the time these words are put onto the page, the story's changed.
Yeah, no, I mean, look, this thing is like up. It's like, I don't know how much year to date. So like, it's a drop in the bucket, in my opinion. But anyway, like, look, you want to talk about the stock market. The most important thing to remember is the economy is slowing. The economy is slowing. That's the bottom line. The economy is slowing. Higher for longer interest rates. The economy is not slowing as fast as people wanted it to slow, as fast as the Fed wanted it to moderate, but it's slowing. And so I think, we're long gone are the crazy days of 2021. Let's put it that way. So these companies that were expecting, especially the big tech companies that were expecting interest rates to come down sooner, are having to deal with the fact that interest rates are staying higher for longer. And that, even if we get a small rate cut at the end of this year, chances are the Fed will keep interest rates elevated for a while. Unless, of course, we get a real big slowdown in the economy. So tell me, I mean, look, if the economy is slowing, what does that do for businesses? Well, you have less foot traffic, your earnings are not growing as fast, et cetera, et cetera. At the same time, you get a little relief because yields are going to come down a little bit, right? If, on the other hand, the economy does not slow as expected and inflation remains higher for longer, well, people are spending more, but yields remain elevated, and which tends to affect kind of the tech stocks. So, those stocks, those companies that are highly leveraged. So that's kind of the idea here. And, what do I really think is going to happen? I think the economy is going to slow, and we're going to see a small easing in yields. And I think that's good, but it also means that, for these big giants that were maybe betting that the party would last forever, where they're going to come to the realization that basically the party is not going to last. You're going to get a little easing on the interest rate front, but not that much. But the consumer is going to slow down maybe a little bit more. And of course, I think when the consumer starts to ease back, that's not good for business, bad for Wall Street. So that's it. Now, hopefully the economy stays on solid ground, because a solid, when Main Street is solid, Wall Street generally does very well. So that's kind of what I see. I don't know what's going on with NVIDIA today. Is AI going to be a game changer? Yes, it is. It's pretty obvious given the things I'm able to see get done using these models that are out there. It's just unbelievable. And so the tools that are being brought, that are being used by internally, Microsoft. I have a friend who works at Microsoft. I mean, the stuff they're doing, the stuff they're using internally is just unbelievable, man. And I can't wait to see that stuff go out to the rest of the world. So anyway, yeah, NVIDIA, I'm not worried about it. I think potentially this could be a buying opportunity, unless there's news of some sort of scandal or something, or some regulatory thing that
Well, good thoughts as always. For Dr. Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics and dozens of other quality podcasts at americastalking.com.
Hey there, it's Orphe Divounguy, the co-host of the Everyday Economics podcast. Exciting news! Check out my new weekly column at thecentersquare.com. Join me as I break down complex economic trends in a way that's easy to understand for everyone. Check out the column every week and stay informed about the economic forces shaping our world. Be sure to subscribe to the Everyday Economics podcast and visit thecentersquare.com today.